All right, let's jump right into it today. We're going to take a deep dive into healthcare finance.
Yeah, exciting stuff.
We've got Centene Corporation's Q3 2024 earnings call, a whole stack of reports and articles. We're going to try to break it all down for you.
Well, Centene's a pretty big deal in managed care, and with all these Medicaid changes happening across the country, it's a really interesting time to be looking at them.
Absolutely. I mean, investors are definitely watching closely, especially with Centene's huge role in the Medicaid market.
And you know, what's really fascinating is that even with all the uncertainty surrounding these Medicaid changes, Centene actually had a pretty good quarter.
Yeah, they actually beat expectations and even raised their earnings forecast for the year. I think it was something like adjusted diluted EPS of over $6.8.
Exactly. That's right. And that's a really strong signal to investors that they're managing these challenges effectively.
So $6.80, that might sound like a lot, but what does that really mean for the average person?
Well, basically, it means that Centene is making more money per share than anyone thought they would. And that's a big confidence booster for investors who are always looking for signs of future growth.
And the market definitely responded, right? I think their stock price jumped after the earnings release.
Oh, yeah, absolutely. I think we saw a surge of over 4%, so the market is definitely impressed with their performance.
So let's break this down a little bit, starting with this whole Medicaid redetermination thing, because I know that's been causing a lot of buzz.
Right. So essentially what's happening is that millions of Americans are being reevaluated for Medicaid eligibility, and as a result, a lot of people are losing coverage.
So it's like a huge shift in the risk pool for companies like Centene who manage a lot of these Medicaid plans.
Exactly, and that means that states need to adjust the rates they pay to managed care organizations because the healthcare needs of the remaining Medicaid population might be different.
So if they don't adjust the rates, it puts pressure on Centene's profits.
Precisely. And that's why Centene has been in this kind of tug of war with states over these Medicaid rates, arguing that they need more money to properly care for the patients who are still enrolled.
So it's a balancing act for Centene. They need to advocate for higher rates without jeopardizing their relationships with these states.
Absolutely. And it sounds like they're taking a very strategic approach, presenting data to states to show the actual costs of caring for these patients.
So it's a data-driven negotiation, which makes sense in this kind of environment.
Exactly. And they've actually reported some progress on this front, stating that 100% of the states they work with have taken some action to adjust the rates.
Okay, so that's a positive sign. But the big question is whether those adjustments are enough to cover those rising costs.
Right, and that's something that's still being discussed. It's definitely an ongoing process.
Now, they also mentioned something about rejoiners, which sounds a bit like a revolving door situation.
Yeah, so rejoiners are basically people who were initially kicked off Medicaid but then ended up re-enrolling later on.
So you can imagine the headache this creates for Centene. They lose a bunch of members and then some of them come back. It's just a lot of churn and uncertainty.
Yeah, exactly. And that churn makes it really hard to manage their financials, especially something called the medical loss ratio, or MLR.
Okay, stop right there, because I know our listeners are probably thinking, what in the world is MLR? Can you break that down for us?
Sure. Think of MLR as a measure of how much of the money Centene receives from the government they actually spend on providing health care to their Medicaid patients.
So a lower MLR means they're being more efficient and making more profit.
Exactly. And all this churn with people going off and on Medicaid makes it really hard to keep that MLR under control.
But it sounds like there's a bit of good news here. Centene reported that the rate of rejoiners is slowing down, so hopefully that will help stabilize things.
That's right. And it should ease the pressure on their MLR in the coming months.
Okay, so even though this Medicaid situation is far from over, it seems like Centene is finding ways to adapt and even secure some wins along the way.
Yeah, they highlighted some new contracts they've won in states like Iowa, Pennsylvania, and Michigan, which shows there's still a dominant force in the Medicaid market.
So it's not all doom and gloom. They're playing a smart game and making strategic moves to navigate these choppy waters.
Exactly. And remember, it's not just about Medicaid. They've also got their hands in other areas of healthcare, like Medicare Advantage and the ACA marketplace.
Okay, so let's shift gears and talk about those other segments. I'm curious to see how they're performing amidst all this Medicaid drama.
Well, the good news is that both Medicare Advantage and the ACA marketplace showed solid growth in Q3.
That's encouraging, especially considering the turbulence in Medicaid. It shows that Centene isn't just a one-trick pony.
Absolutely. They're a diversified healthcare player, which makes them less vulnerable to any single policy change or market disruption.
Now, let's zoom in on Medicare Advantage for a second, because I remember they mentioned streamlining their contract portfolio and focusing on lower-income seniors. Is that a strategic shift?
Yes, it definitely is. They're basically doubling down on their expertise in serving lower income populations, whether they're on Medicaid or Medicare.
So they're playing to their strengths.
Exactly. And while this might mean slightly lower revenue in the short term, they believe it's a smart move for long-term stability and profitability.
So it's a long-term play, which makes sense considering their track record in this space.
Absolutely. And speaking of playing the long game, they also seem pretty excited about their Part D business, which is the prescription drug coverage part of Medicare.
What's got them so pumped about Part D?
Well, they're anticipating significant revenue growth next year, largely due to the changes brought about by the Inflation Reduction Act.
Ah, so they're well-positioned to benefit from those policy changes.
It seems that way, and they mentioned they're below the auto-assigned benchmark in most regions and offers zero premium products in many states, which makes them very attractive to seniors looking for affordable options.
Sounds like a winning formula. Now let's hop over to the ACA marketplace. I think I read somewhere that they already have something like 4.5 million members.
That's right. It's a significant increase from last year, and it shows they're continuing to expand their reach in this market.
So they're not just riding the wave, they're actually shaping it.
Exactly. And they're using that expertise to navigate the upcoming open enrollment period, where they expect to see even more growth, albeit at a more moderate pace.
So overall, it seems like Centene is juggling a lot of balls in the air, dealing with the Medicaid uncertainties while capitalizing on opportunities in Medicare Advantage and the ACA marketplace.
Yeah, you got it. It's a real balancing act, and so far they seem to be handling it pretty well, exceeding expectations and adapting to the ever-changing healthcare landscape.
And amidst all this talk about policy and finance, they even managed to squeeze in a little tech talk about using AI to optimize their provider contracts.
Oh yeah, that was a cool detail. It shows that they're not just focused on the big picture, but also looking for ways to improve efficiency at every level.
Okay, so before we dive into the Q&A with the analysts, let's do a quick recap for our listeners.
Great idea. Let's crystallize those key points.
First off, Centene is tackling this whole Medicaid redetermination head-on, working with states to adjust those rates and keep things running smoothly.
And they're not just complaining, they're using data and building relationships to make their case.
Meanwhile, they're not putting all their eggs in the Medicaid basket. They're diversifying their portfolio and growing in Medicare Advantage and the ACA marketplace.
And they're not neglecting operational efficiency either, using technology to streamline their processes and become leaner.
Okay, so with that foundation laid, let's move on to the analyst Q&A, where we can see what kind of questions investors had and how Centene responded.
Yeah, the Q&A is where things usually get really interesting. You can really dig into the details and get a feel for the company's strategy and outlook.
So let's kick things off with Stephen Baxter from Wells Fargo. He's zeroing in on that all-important Medicaid MLR we talked about earlier.
Yeah, he wants to know what Centene expects for Q4 and if there are any special factors they're considering.
He's also curious about the overall cost growth in Medicaid and how those rate updates are going to impact their margins.
Basically, he's trying to figure out how well they're controlling those costs and whether they're making enough profit from their Medicaid business.
Okay, let's listen closely as Sarah London, Centene's CEO, addresses these questions.
Here we go. Sarah really emphasizes the groundwork they've laid over the past 18 months, proactively engaging with states on this issue.
So they're not just showing up empty-handed asking for a handout.
No, not at all. They're coming to the table with data evidence showing what's really happening on the ground.
Smart move, especially with all the scrutiny on healthcare costs these days.
And it seems like that approach has been effective. They're saying that states are acknowledging the need to adjust rates based on the actual healthcare needs of the remaining population.
So it's not just about Centene's bottom line. It's about making sure those patients get the care they need.
Exactly. And Sarah even highlighted some specific states, I think she mentioned 14, that have already implemented rate updates between July and October. So that's a good sign.
Yeah, it shows those adjustments are starting to flow through the system, hopefully providing some relief.
Now, Drew Asher, Centene's CFO, chimes in here to talk about the MLR, which we were discussing earlier.
Okay, let's hear what Drew has to say about that all-important metric.
Well, he emphasizes that they expect Q3 to be the peak for the MLR, with improvements anticipated in Q4.
So they're basically saying the worst is over, right? Things should start looking up from here.
That's the message they're sending, and they're attributing this improvement to those rate updates we were just talking about, particularly in a few large states where renewals happened in September and October.
So those rate increases are starting to kick in and make a difference.
Yes, but Drew also reminds us that there are normal seasonal variations in their other businesses, like commercial insurance and Medicare, where costs tend to be higher in Q4.
Right. So we need to keep that in mind when we're looking at the overall picture.
Absolutely. It's all about context. Now let's move on to Josh Raskin from Nephron Research. He's got a two-part question for Centene.
Okay, hit us with that two-parter, Josh.
All right, so first, he's curious about the core Medicaid utilization trends, excluding the acuity shifts caused by redetermination.
So basically, he wants to know what's happening with healthcare usage among Medicaid patients beyond the noise of redetermination.
Exactly. He wants to get a sense of those underlying trends, and he's particularly interested in behavioral health, which we know has been a concern for Centene in the past.
Makes sense. Mental health is a huge factor in overall healthcare costs.
And for his second question, he asks how the return to normal rate verification procedures is going to impact those rate negotiations with states.
So once this whole redetermination frenzy is over, what happens next? How does that change the game?
Right. It's an important question because the landscape is constantly shifting.
Let's go back to Sarah for her response to these questions.
She confirms that their view on utilization trends hasn't really changed much from previous updates, so no major surprises there.
Okay, so no sudden spikes or anything that would raise alarm bells.
Right. And she reiterates that the main driver of that elevated MLR is the mismatch between rates and the acuity of the remaining Medicaid population.
Which they're actively addressing through those ongoing discussions with states.
Exactly. And she highlights their ability to isolate continuous member cohorts, meaning they can track groups of patients who've remained on Medicaid throughout this whole redetermination process.
I'm not sure I follow. Why is that significant?
Well, it allows them to show that those members aren't experiencing unusual increases in utilization, which strengthens their argument that the pressure on the MLR is primarily due to redetermination, not some underlying problem with their Medicaid business.
Ah, I see. So it's a way to isolate the impact of redetermination and make a stronger case for those rate adjustments.
Precisely. And in terms of those specific areas Josh asked about, like behavioral health, Sarah mentioned some trends that are consistent with what they've seen before.
So nothing out of the ordinary there.
Right, but they're addressing those trends through things like adjusting their formularies for prescription drugs, implementing prior authorizations for certain procedures, cost management techniques.
So they're using a variety of tools to keep those costs under control.
Now, regarding Josh's second question about how the return to normal re-verification procedures will impact rate negotiations, Sarah explains that those conversations are mainly driven by aggregate data.
So they're looking at the big picture, the overall healthcare needs of the population, not getting bogged down in the details of how individual members were re-verified.
Exactly. It's about the forest, not the trees.
Okay, now we have A.J. Rice from UBS with the question about those Medicaid rate increases.
I'm sure he's going to dig into the numbers here.
Let's see what A.J.'s got.
He's trying to reconcile what Centene has been saying about rate adequacy with what some other competitors have been saying.
So he's playing the comparison game, seeing if there's any discrepancy in their messaging.
Exactly, and he points out that Centene is projecting composite rate increases in the 4.5% to 5% range, while some other companies have said they need high single-digit or even low double-digit increases.
So he's basically asking if Centene is being too optimistic about these rates, or if there's something else going on.
Right. He wants to know what kind of rate increase they really need to achieve that consistent improvement in their MLR.
A valid question, especially since there seems to be some disagreement in the industry about how much is enough.
And Sarah acknowledges that those required rate adjustments vary from state to state because each state has its own unique situation.
Makes sense. You can't just apply a blanket solution across the board.
And she reiterates that they're still working with states to make sure those adjustments are sufficient.
So the negotiations are ongoing. They're not backing down.
Not at all. And she emphasizes that this is an unprecedented environment, which has led to some unusually large rate increases in certain cases.
So states are willing to make significant adjustments in some instances. That's a good sign.
Absolutely. And Drew even adds that they've secured high single-digit rate increases in some very small states.
Wow, that's a big win, especially considering the political climate around healthcare spending.
It shows that states are taking the data seriously and recognizing the need to make changes.
So it sounds like they're making progress, even if it's a gradual process.
Exactly. It's about finding that sweet spot where the rates actually reflect the cost of providing quality care.
All right, next we have Justin Lake from Wolf Research, and he wants some clarification on those Medicaid rates.
Justin loves to get into the nitty-gritty.
Let's see what he's got.
He wants to know the specific time period covered by that 4.5% to 5% composite rate increase that Centene mentioned earlier.
So he's asking, is that an annual rate increase or is it something else?
Exactly. He's trying to pin down the time frame so he can understand the financial implications.
And he also asks about the cost spread compared to that rate increase and whether it includes pass-through payments.
Okay, now we're getting into the weeds a bit, but essentially he's asking how much their costs are actually increasing relative to those rate increases.
And whether those rates include any special payments that go directly to the providers, right?
Exactly. He's trying to assess the underlying profitability of their Medicaid business.
Okay, let's bring Drew back in to clarify things.
So Drew explains that the 4.5% to 5% figure represents the bag half rate, meaning it's based on more recent data that reflects the current makeup of the Medicaid population after redetermination.
So it's not based on old data, it's based on the latest information.
Exactly, and he emphasizes that this figure represents net rates, meaning it excludes those pass-through payments and any changes in benefits that are mandated by the state.
So it's a clean number that reflects those core rate adjustments they're getting.
Right, and he explains that they're really focused on what they call the exit run rate PMPM, which is basically the amount they expect to receive per member per month by the end of the year.
So they're not just trying to keep up with past costs. They're looking ahead and making sure those rates are aligned with their future projections.
And he reiterates that when they look at those continuous member cohorts we talked about earlier, they're not seeing any major cost trends emerging.
Again, that strengthens their argument that the main issue is redetermination, not some uncontrollable cost spiral.
Now we have Sarah James from Cantor Fitzgerald joining the conversation with a question about pent-up demand and GLP-1s.
All right, Sarah James, let's hear what you've got.
She's interested in understanding how much of the Medicaid trend is driven by pent-up demand from those rejoiners versus the ongoing impact of those acuity mix changes.
So is it just the rejoiners coming back with higher healthcare needs, or is it a broader shift in the population towards sicker patients?
Exactly. And she also asks about the impact of GLP-1s on that trend and whether states are adjusting rates to account for those new drugs.
GLP-1s, those are the weight loss drugs that have been making headlines lately.
Right, they're very effective, but also very expensive, so states are trying to figure out how to cover them.
Okay, back to Sarah London for her response.
She starts by saying that the slowdown in rejoiner rates should help things settle down in 2025, meaning that as fewer people turn back into Medicaid, that pressure on the MLR should ease.
Hopefully that means this whole rejoiner thing is a temporary headache.
That's what they're hoping for. And she explains that rejoiners often do come back with higher healthcare needs, which makes sense because if they were without coverage, they might have delayed care, leading to more serious issues later on.
There's a ripple effect, you disrupt the system and it takes a while for things to stabilize.
And she emphasizes that if they had been receiving premiums for those members during that gap period, their MLR would have looked a lot more normal.
So it's a timing issue, a distortion caused by the way redetermination and re-enrollment works.
Now, Drew jumps in to talk about GLP-1s, explaining that they've already had some experience with these drugs in states where they've been covered for weight loss for a while.
So they have some data to share, which could be helpful for other states that are just starting to cover these drugs.
Exactly, and that data can be used to inform both the formulary decisions and the rate discussions with states.
It's all about using data to advocate for fair reimbursement.
And Drew mentions that one state recently added GLP-1s to its formulary and that they're sharing data on a monthly basis to make sure the rates are keeping up with the actual utilization.
So they're being very proactive and collaborative in managing this new cost trend.
Okay, now we have Andrew Mock from Barclays with a question about exchange market growth and Medicaid trends.
Andrew, take it away.
He starts by asking if Centene's modest exchange growth expectations imply that they think they can grow faster than the overall market.
So even though their projections seem conservative, is there an underlying belief that they can gain market share?
He's digging for some hidden optimism there, and he also asks about their assumed Medicaid cost trend for Q4, given that slight MLR setback they experienced in Q3.
Still trying to understand those cost dynamics in Medicaid? It's a recurring theme.
And Sarah addresses the exchange growth question first, confirming that they do expect to grow in the marketplace, but they're not giving any specific targets at this point.
Keeping those cards close to their chest for now?
Right, playing it safe. But she reiterates that their main focus for 2025 is on achieving those margin targets. I think they said 5 to 7.5%.
So profitability is the name of the game.
Absolutely. And she acknowledges that they're expecting more moderate growth in this upcoming enrollment period compared to previous years. And she attributes that to a few factors.
Makes sense. Things are definitely settling down after all that disruption.
Right. She mentions the return to normal seasonality and the impact of program integrity policies, which are designed to prevent abuse and ensure people are in the right program.
So those policies can sometimes slow down growth in the short term.
Exactly. Now, Drew jumps in to address the Medicaid trend question, emphasizing that Q3 is expected to be the peak for that MLR.
So they're sticking to their guns on that. They believe the worst is behind them.
And he explains that while their guidance does imply a higher sequential trend in Q4, that's mainly due to the timing of those rate updates.
So those rate increases will have a bigger impact in Q4, helping to offset those cost pressures.
All right, now we have Lance Wilkes from Bernstein with questions about rate increases and rejoiner trends.
Okay, Lance, let's dig deeper into those Medicaid complexities.
He starts by asking whether states are applying those rate increases by program or at a composite level.
So are those increases targeted to specific programs within Medicaid, or are they just applied across the board?
Exactly. He's trying to understand how those adjustments are being implemented on the ground.
And he also asks about the rejoiners specifically, whether Centene has enough data to see if their utilization patterns normalize over time.
So is it a short-term blip, or are those rejoiners going to keep driving up costs in the long run?
Let's hear from Sarah.
Sarah explains that typically states provide a composite rate, but it's based on a buildup of the underlying sub-programs.
So it's a blended rate that takes into account all the different Medicaid programs they manage.
And she confirms that they do have what they call rejoiner runout data, meaning they can track those members over time and see how their healthcare usage evolves after they re-enroll.
That's crucial data because it helps them understand if those rejoiners are a temporary cost bump or a long-term trend.
Exactly. And Sarah reiterates that rejoiners often do have higher healthcare needs initially, but that their utilization tends to normalize over time.
So it's a short-term shock to the system, but not necessarily a permanent change.
Right. And she emphasizes once again that if they had been receiving premiums for those members during that gap period, their MLR would have reflected that normalization.
It all comes back to that timing issue.
Now we have Adam Ron from Bank of America shifting gears to talk about their Part D business.
Always interesting to get a different perspective. Let's hear what Adam has to say.
He notes that Centene is expecting a 1% margin in Part D next year and wants to know how that compares to this year's performance.
So is that margin improving, declining, staying the same?
Exactly. And he also asks about utilization shifts related to the Inflation Reduction Act, specifically mentioning a competitor who saw increased utilization of certain specialty drugs after member cost sharing went down.
Which makes sense. If those drugs are more affordable, people are more likely to use them.
And that increased utilization could impact profitability if the rates aren't adjusted accordingly.
Okay, Drew, talk to us about Part D.
Drew expresses confidence in their Part D business and their ability to manage those changes brought about by the Inflation Reduction Act.
So they're not too worried about those utilization shifts.
Not at all. They say they anticipated those changes and factored them into their pricing.
Sounds like they did their homework.
And Drew confirms that their Part D business is on track for 2024, with margins in a similar zone as what they're projecting for 2025.
So a consistent profit picture.
Exactly. And he highlights that even though the margin percentage might not change much, their Part D revenue is expected to grow significantly in 2025, thanks to the mechanics of the IRA.
So it's a growth story, even if the margin stays relatively flat.
Drew expresses satisfaction with their ability to estimate that direct subsidy, which was a key risk factor with the IRA changes.
So they feel like they've got a good handle on the financial implications.
And he expects membership growth during open enrollment because their pricing is competitive.
Those zero premium offerings are definitely attractive to seniors.
But he acknowledges that they're not content with a 1% margin, but they believe it's the right target for 2025, with plans to gradually increase it in the following years.
So they're in it for the long haul, aiming for sustainable profitability over time.
Now we have Scott Fidel from Stephens jumping in with questions about exchange market growth and California Medicaid.
Scott, welcome to the discussion.
He's picking up on Sarah's earlier comment about expecting mid-single-digit exchange market growth next year.
And he wants to know what's driving that projection.
Right. He points out that one of their competitors has projected mid-teens growth, so he's asking Sarah to explain the difference.
So is Centene being too conservative, or are there specific factors that are holding them back?
And he also asks about California Medicaid, specifically a retroactive rate adjustment that one of their competitors mentioned.
Trying to get some insight into Centene's experience in California.
So Sarah reiterates their long-term bullish view on the exchange market, citing factors like increased stability, broker infrastructure, and affordability awareness.
Those are all positive signs for future growth.
But she explains that for this particular enrollment period, they're expecting more moderate growth for a couple of reasons.
Makes sense. This year is definitely unique.
Firstly, they're coming off a period of really high growth, fueled by all that redetermination activity, so it's a tough comparison.
That's a natural consequence of the unusual enrollment patterns we've seen.
And secondly, they're anticipating some dampening effects from those program integrity policies being reintroduced or implemented.
Those policies are designed to prevent abuse and ensure more stable enrollment, but they can slow down growth in the short term.
Exactly. She specifically mentions that agent of record lock policy they implemented early on, which CMS later adopted.
Again, showing that they're often ahead of the curve.
And she explains that this policy is designed to promote stability by requiring members to work with a single broker throughout the enrollment process, so it reduces broker churning.
It's about simplifying the process for the consumer.
And she also mentions the reintroduction of policies that address things like failure to report income accurately and overlap between marketplace and Medicaid eligibility.
Making sure people are in the right program and getting the correct subsidies.
And while these policies might slow down overall market growth, she believes they're ultimately beneficial because they promote program integrity and a positive consumer experience.
It's about finding that balance between growth and responsible administration.
Now, Drew addresses the California Medicaid question, mentioning that they were actually able to secure a negative retro adjustment in Q2.
So what does that mean in plain English?
Basically, it means they got a favorable adjustment to their payments from California, which is good news for their bottom line.
So another win in those state-level negotiations.
He doesn't give us too many details, but he confirms that they're actively engaged in those discussions.
It's a reminder that those state-level dynamics are constantly evolving and can have a significant impact on their performance.
Okay, moving on to Michael Howe from Baird. He's got questions about exchange growth and Medicaid cost trends.
Sounds familiar. These are definitely hot topics today.
He's picking up on some of the themes we've heard before, wanting to get more clarity on those key areas.
Michael, let's hear your questions.
He starts by asking if Centene's modest exchange growth expectations mean they think they can outperform the overall market.
So is it a conservative projection, or do they believe they can actually gain market share?
He's looking for that nuance, and then he asks about their assumed Medicaid cost trend for Q4, given that slight MLR miss in Q3.
Trying to understand those cost dynamics. We've heard that a few times today.
And Sarah jumps in to address the exchange growth question, confirming that they do expect to grow in the marketplace, but they're not giving us any specific targets.
Holding their cards close to their chest again.
Yep, but she reiterates that their main focus for 2025 is hitting those margin targets, that 5 to 7.5% range.
So profitability is still top of mind.
And she acknowledges that they're expecting more moderate growth in this open enrollment period compared to previous years due to those program integrity policies and the return to normal seasonality.
Makes sense. Those are definitely factors to consider.
And Drew takes over to address the Medicaid trend question, emphasizing once again that Q3 is expected to be the peak for that MLR.
Okay, so they're standing firm on that.
Absolutely. And he explains that while their guidance implies a slightly higher sequential trend in Q4, that's primarily due to the timing of those rate updates, which should kick in and offset those cost pressures.
So those rate increases are going to be crucial in the coming months.
Now we have Dave Winley from Jefferies, shifting gears a bit to talk about G&A expenses and AI.
Always interesting to hear about those cost management initiatives and how they're using technology.
Dave's particularly interested in that AI project Sarah mentioned earlier, the one they're using to optimize provider contracts.
So he's curious about the potential cost savings and efficiency gains from using AI.
He wants to know if they can quantify those benefits and if they're ready to implement any of these projects.
And he also asks about any timing-related spending items that might be impacting their G&A, especially in light of that elevated MLR. Sarah starts by acknowledging that their SG&A typically goes up in Q4 because of the selling season for Marketplace and Medicare.
Makes sense. They have to spend more on marketing and advertising during that time.
But she emphasizes that they've already achieved significant operational efficiencies and that they're continuing to focus on cost management.
So they're not just letting costs run wild.
And she seems particularly excited about what she calls the second and third order opportunities they've identified, which suggests they're going deeper and finding more ways to optimize.
Not just going for the low-hanging fruit.
And she confirms that the AI project is ready to go. They're ready to implement it.
So we might see some tangible results from that soon.
And she highlights that they've been gradually incorporating AI into various parts of their business as part of their value creation plan.
So it's not just a one-off project, it's part of a bigger strategy.
And she explains that all their efforts to standardize processes have really paved the way for automation and AI implementation.
So they're building a foundation for using technology to really streamline those tasks.
Makes sense. It's like setting the stage for AI to come in and do its magic.
And she believes that AI can help them leverage their size and scale to drive even more administrative efficiencies, freeing up their talent to focus on more strategic activities.
So it's not about replacing people. It's about augmenting their capabilities.
Yeah.
Now, Drew chimes in to provide some context on G&A, but he promises to give us more detail at their upcoming Investor Day. Always a good tease to keep us coming back for more.
Right. He acknowledges that the G&A ratio will depend somewhat on the business mix, because Marketplace and Medicare have higher SG&A loads than Medicaid.
Makes sense. Those segments typically have higher marketing and administrative costs.
And he also mentions that we need to factor in the impact of PDP revenue growth on that ratio.
So rapid revenue growth can sometimes put upward pressure on G&A.
Okay, now we have a question from an unidentified analyst who's curious about their Medicaid PMPM growth.
PMPM, that's per member per month, right?
That's right. And the analyst notes that Centene's Medicaid PMPM seems to have grown faster than some of their peers this quarter.
So they're spotting a potential trend, trying to see if Centene is an outlier.
And they ask how much of that growth is driven by rate adjustments and what other factors might be contributing.
Unpacking those drivers.
And they also want to know if that growth rate is sustainable. Is it a one-time thing, or is this a new normal?
Okay, Drew, time to break it down for us.
Drew highlights the impact of state-directed payments on their PMPM calculation.
State-directed payments, what are those?
Basically, payments that come directly from the state, often for specific programs or services.
So it's a unique factor that might be skewing the comparison with their peers.
Exactly. And he explains that these payments increased significantly in the quarter, which affected both their cash flow and that PMPM yield.
So those state-level dynamics can really shake things up.
He acknowledges that those rate increases they secured are also contributing to that PMPM growth, but those state-directed payments are a big part of the story.
So it's a combination of factors, both rate adjustments and those unique state-level payments.
And he doesn't go into detail about the sustainability of that growth rate, but he suggests that the analysts take those state-directed payments into account when making comparisons.
So it's a nuanced answer, acknowledging the complexity of the situation.
All right, and that brings us to the end of the Q&A portion of Centene's earnings call.
Wow, that was a lot of information. I feel like we just drank from a fire hose of healthcare finance.
Yeah, those analysts really grilled them on every detail, especially that whole Medicaid redetermination saga.
But what really impressed me was their transparency. They didn't try to hide anything. They addressed those tough questions head on.
And they backed it all up with data. It's clear they did their homework and came prepared.
It's obvious that they're laser focused on navigating those Medicaid challenges, making sure they get those rate adjustments they need, and setting themselves up for success in that market.
And they're not putting all their eggs in one basket. They're strategically diversifying into those other areas, like Medicare Advantage and the ACA marketplace.
Plus, they're embracing technology, using AI to become more efficient and stay ahead of the game.
They're playing a smart long game, and I think they're sending a clear message to investors that they're adaptable, resilient, and focused on sustainable growth.
Okay, before we move on, let's recap those key takeaways for our listeners, just to make sure everyone's on the same page.
Sounds good. Let's distill it down to the essentials.
First and foremost, Centene is proving they can handle this Medicaid redetermination situation. They're working with states, they're using data, and they're securing those rate adjustments.
They're also diversifying their portfolio, focusing on growth in Medicare Advantage, and they're not afraid to embrace technology to streamline their operations.
So overall, it's a pretty positive picture. They're adapting to the changing landscape and positioning themselves for success in the long term.
Exactly. And as we move forward, here's a thought-provoking question for our listeners. With the upcoming election, how might potential policy shifts impact Centene's future, especially their focus on Medicare and the ACA marketplace?
It's a great question because the political landscape is always changing, and those changes can have a ripple effect throughout the healthcare industry.
So stay tuned because we'll be watching those developments closely. It's impressive, isn't it, how they're tackling these short-term challenges while still keeping an eye on the long game.
Absolutely. You can tell they're not just reacting, they're proactively planning for the future.
And that data-driven approach they keep talking about, it seems to be key to their strategy.
Yeah, that's something we've seen throughout this call. They're not just throwing out numbers, they're backing up their claims with solid evidence.
And speaking of using data, that AI initiative for provider contracts, that's a pretty interesting development.
It is. It makes you wonder what other ways they might be using technology to improve efficiency and maybe even the quality of care.
Oh, absolutely. It's a glimpse into the future of healthcare administration.
You know, one thing that I didn't hear much about in this call was their international business.
That's true. They didn't mention anything about their international operations. Maybe we'll get more details at their investor day.
Yeah, hopefully they'll shed some light on that. Oh, and another thing, what about their dividend policy? Did they mention anything about that?
I don't recall them specifically addressing dividends during this call. It seems like their main focus right now is on those share buybacks.
Right, which, given their stock performance and all the confidence they've expressed, makes sense.
Definitely. They're putting their money where their mouth is.
So, as we wrap up this deep dive into Centene's Q3 earnings, what are your final takeaways? What should our listeners remember?
Well, I think the biggest takeaway is that Centene is demonstrating a remarkable ability to adapt and thrive in a very dynamic healthcare environment.
They're clearly not afraid to make tough decisions, like streamlining their Medicare Advantage portfolio or investing in new technologies.
And they're actively engaged in shaping policy discussions, particularly around Medicaid rate adequacy, which is crucial for their long-term success.
It's been fascinating to get this inside look at their strategy and how they're approaching these challenges.
I agree. It's a reminder that the healthcare industry is constantly evolving, and companies like Centene that can adapt and innovate will be the ones that come out on top.
Absolutely. Well, that concludes our deep dive into Centene's Q3 2024 earnings call. Thanks for joining us.
And as always, if there are any other companies or industries you're curious about, let us know. We're always up for a deep dive.
Until next time, keep exploring, keep learning, and keep listening.